Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, January 19th, 2016. Well, what you're looking at here is the UNG. Now, the UNG is the natural gas ETF. The reason why I bring it to your attention is because I had puts on this with Options Alert members, and Options Alerts is a service we offer here at InTheMoneyStocks.com. And ultimately, I just got rid of these options. I just sold my puts. And you might say, well, why? Well, what you have to look at is the daily chart. So right now you're looking at the intraday chart. I want to go over the specs on why. And also I'll talk about why I ended up shorting the UNG. All right, so let's start with that. Why did I end up shorting the UNG? Well, first of all, the stock or the ETF here for natural gas had rallied over 30% off the lows. Anytime something is coming down this sharply and has a big bounce of 30% or more, you need to start thinking that unless it's news driven, which this wasn't, right? This was just a counter trend bear market rally, then it's going to have a pullback off that level. So the big move up here, notice where the high was right here where I picked up these puts. And again, when you buy puts, you're basically shorting. You're betting that the stock or the ETF is going to go lower. But look at that little pivot high, and then notice the little pivot low right here and right here. All right, so there's a gap fill here, pivot low, and a little bit of a area right here. So that was the idea there. The big 30+% rally into major, what we would consider major resistance. All right, so that's really where I picked up the puts on the UNG. Now, as the UNG pulled back, we made a lot of money. We actually closed it out for a 50% profit. 50% here, folks. And the reasoning here why I closed it out is very simple. So what you have to realize is that from this low, which was around 690, to a high here of 925, what we got was over a 50% retrace. In fact, it was basically a 618 retrace, which is a Fibonacci number. And again, if you use Fibonacci's, if you know what they are, they're very important when looking at retraces of big moves, because almost always you'll see a bounce based on a Fibonacci level. All right, and usually the 0.5 and the 0.618 are the big ones. The 618 is my favorite personally. Okay, then in addition, as you notice here, look at the initial move up. You had this one red candle right here before the next move up. What you did was you actually filled this gap. See, there's no real gaps here until this big gap here, and you filled the gap. If I put a trend line in right here, today we pierced that level. So not only did you have a Fibonacci range here, but you also had a gap fill. All right, so not only was I up 50% on the trade, not only did I nail the high here, but we also looked to take our money off the table right at a specifically technical level. And this is important, guys. I can't stress how important this is. This is very important. You need to look for specifics when you're taking money off the table or when you're entering a trade. And that's exactly what we did here. So, again, the beautiful rally gave us an opportunity to short. And then on the way down, we're not looking for a full move down here. Now, could it go there? Yeah, maybe. But the odds aren't better than 50-50 at this point. When we shorted it by buying puts, the odds were extremely in our favor, 80-90% success rate. Same thing here. Until this level, they were in our favor. Now they're equal or even against us a little bit. And that's really what you have to look at. When you're doing a trade, whether it's a regular stock trade or an options trade, options are a little trickier because you have to use a time factor here. But basically what you're analyzing is risk to reward. So at what level does the risk start to outweigh or equal the reward? Well, when you're buying puts up here, the reward is far outweighing the risk. I mean, yeah, maybe it goes a little higher, but the odds don't favor that. So as you pull back, the odds start to slowly shift. So instead of being 80-90% winner here, once you're down here, maybe it's 75-25. Once you're down here, maybe it's 60-40. And then once you're down here, I would say it's 50-50 or even the risk starts to outweigh the reward. And that's how you have to be thinking as a trader or an investor. That's the important thing here. Okay, so bottom line is that's what we got going on here, folks. And again, great job for Research Center members. We've been rocking it, as well as Options Alert members. Options Alert members just nailed 50% profit on the UNG. I encourage you to come check out the Options Alerts. I'm going to be putting out some options trades later today. Get involved, folks. Lots of money to be made in this market environment. Take care.